Markets are open and SoFi Technology have released their financial report. As a subsequent consequence of this, the stock jumped up 15% initially and is now pretty stable at near 14% on the day. So is it now time to pile all of your money into SoFi? Panic right now, right now, right now. Well, in this video, I will be letting you know my thoughts. We're going to be going over the earnings report. We're going to be going over their financials. We're going to be comparing it to previous data in which we have, and we're going to be conducting an intrinsic valuation to really understand, is SoFi Technologies a stock in which we should be buying right now? If you've been watching this channel for a while, you will know that I've been buying this actively since around here, since it broke out consistently above this $15-ish range, and we are up massive on this position. So if you want to learn how to potentially become a successful momentum trader, then hit a like, hit a subscribe, because that is what I go over on a daily basis. So with that being said, let's get straight into this video. So what realistically are the quick figures for SoFi? Well, they beat the estimate of 0.06 on an earnings per share to a 0.08, which is a 33% gain. On the revenue, they beat this by 7%. On the EPS, they were up 700% year over year, which looks really good on paper. Of course, the revenue was up 44%, with the earnings per share obviously being up 33% quarter over quarter, and the revenue being up 11% quarter over quarter. So going into a bit of detail of some specific things from this report that are interesting to note, we have here the membership growth. So over this last year, we have seen this grow year over year, of course, 34%. With the compound annual growth rate being at 51%, and in the product section here, we can see this is at 53% with a 34% year over year return. So SoFi does now offer a premium subscription in a sense, and this is essentially what you will get from that. You will become a member, you will have access to banking through SoFi, which will be, I imagine, accredited through some sort of security, and then you will have credit card access through SoFi, which again is another incredible stream of revenue for this company. You'll be able to invest through SoFi, and I think that will certainly put competition to Robinhood. They will see an effect from this, and you can also take out loans through this company. So this is really becoming an all-in-one platform, and I think for the average American, that's kind of what you want. You want the convenience, you want the speed, and you want the content right there in front of you. And yeah, you do have the FDIC insurance on this banking. I'm not American. I do not have a clue what FDIC is. I imagine it's the same as what we have here in the UK in our version, but it's good to see. It shows that they have got a level of stability and legitimacy within that field. So again, I feel as if it will just attract many, many people towards that actual SoFi Plus subscription.
Nice.
Looking here on personal loans for SoFi, we've seen this relatively steadily increasing from Q4 22 all the way to where we are today. And obviously, I think that's actually a tell of how stable almost the US economy is in a sense, because obviously we are now seeing rates in the US really high. And for personal loans to be taken out, I think that plays a part as to say, maybe these rate cuts should happen sooner. And it speaks wonders, because when we do see these rate cuts come in, I only imagine these personal loans will start to ramp up as well. So again, another incredible stream of revenue for SoFi potentially coming up in the future. However, in total, I do think that the loans do seem to look as if they are almost stagnant across the board, from personal loans to student loans to home loans. But I still think it shows just how strong it is, because they are still relatively high. But we're seeing similar levels in a sense to 2022. But again, I think once these rate cuts come into effect, it's only going to help SoFi further and further as time goes along. So looking at their financials, I have essentially summed most of this up in my Excel spreadsheet here, and we can now see an intrinsic value for this company and a financial analysis, and this does include for the most part the new data. So looking here on a retention rate, we've seen this actually increase from the quarter before. The retention rate this year is 11.31, this quarter is 11.31%, which is, in my opinion, that is really strong for a company that IPO'd in 2021, has been around since around 2011. I think that's relatively stable. That is where you would expect them to be. And in my opinion, I think that will only just start to increase as time goes along. So Nothing for me to be too concerned about there. If anything, it's positive. Looking at the liquidity ratio, this for this quarter was at 0.5. Now, in my opinion, that should be higher, especially for a lending company. I think for sustainability, I would like to see that higher. And the mean comes in over the last 5 quarters at 0.69. Now, the free cash flow, I do not have the data for, but this is from the quarters before, and this is now breaking even from Q1, and I don't want to spend too much time on this, but it's looking as if it's heading in the right direction, but I couldn't actually find the data for some reason. I don't know if I was just being blind. But now, if we actually look at the chart analysis on a basic level here, we have a 365-day exponential moving average, and we are now well above this, and the volume isn't actually correlating with the price as of right now. However, it has done specifically in the majority of the previous rally. Looking at the bell curve, or normalized distribution for SoFi, this shows us what the percentage of a positive return in a day is within this stock, and it is currently sitting at 54%. Obviously, we've seen a lot of sideways action within SoFi over the last almost 12 months now, so that is to be expected, with the probability of a negative day being at 36%. So now looking at the figures for SoFi, we now have an earnings per share at 0.08 with a growth rate from the analysts projected at 74%. And if we look down here at the surprise rate, this comes in at a mean of 45% with the 33 from this quarter priced into that, of course. Now, previously, I have had really bullish intrinsic valuations for SoFi. However, now the earnings per share is at 0.08. It has actually dropped. So typically when you look on websites like Yahoo Finance, we see an earnings per share of 0.43, and that's what I've typically used. And we have now seen the trailing and forward PE look less favorable on Yahoo Finance. So the trailing PE is at 48.88. The current PE based off of this earnings per share is at 54. So already it's looking to be ahead of that, and the forward PE only essentially makes that worse. If we do now look on Graham's formula, you get a bullish valuation of $16.35 with a margin of safety of 25%. You get an acceptable buy price of $12.26. So looking on the bearish side, we get an intrinsic value of $8.38 and an acceptable buy price of $6.28. However, if we do actually look at the trailing 12 months, EPS, which is 0.43, we can essentially rerun this model and see just how different it is, because a trailing 12 months EPS is certainly going to be more favorable for a stock like this. And this is where we see the night and day change for a long-term game for SoFi. So currently an earnings per share of this trailing 12 months comes in with a valuation of $87 currently, and an acceptable buy price of $65, with an intrinsic value on the bearish side of $45 and an acceptable buy price of $33. So it is night and day, and you do really need to understand that one's a trailing 12 months EPS and one is not. So looking at Peter Lynch's valuation here with the 0.08 EPS, we can see that this comes in with a result of 3.71, indicating that this stock is severely undervalued even with that EPS. However, Peter Lynch's valuation only accounts for price to earnings ratios, not the EPS, so it won't actually have an effect. However, it also goes off of the EPS growth, which again, to recap for those of you that need to rehear this, essentially, that is the growth rate plus the mean surprise rate. Looking down here on my formula, in which I handcrafted myself, it is this formula here. If you can read my awful handwriting, with an earnings per share of 0.08, this gives you an intrinsic value of $17. However, once again, if we change this to 0.64, that's a 3.4, 0.64, if that's what it was, I believe it was pretty much that, we actually now see an intrinsic value all the way up at $136. So it really does depend on what perspective you are looking at this at, because obviously we're seeing an earnings per share on the trailing 12 months of 0.53. However, we're seeing forward P's look less favorable, and we're now seeing a quarterly earning per share come in at 0.08. So very, very confusing stuff, but what do the analysts think? Because that's fried my brain now. So if we look down here, we can see that the analysts currently put SoFi in at a hold, with 5 at a strong buy, 1 at a buy, 10 at a hold, 3 at a sell, and 2 at a strong sell. So something that is interesting to look at, and I look at this for all of the stocks in which I buy, mostly because I'm looking for Nancy Pelosi, but who is actually buying this stock? Well, currently the main guy buying this is a bloke called James Comer, probably saying that right. Again, if he's a famous guy in America, I'm sorry, I'm not an American, so I wouldn't know, but there's a 50-50 split of Democrats and Republicans, being one of each. Obviously there isn't actually much trading going on within the current Senate, Congress, Capitol, whatever it is, of people buying this stock, so insider trading is not actually that much. So realistically, what can we see for SoFi on a chart? So this is a day chart for SoFi Technologies, and it looks like the momentum has certainly been there. We've seen some nice fair value gaps forming underneath price now. We've seen a hammer here, albeit a red hammer, but it is a hammer, and we have now seen price shoot up today. So if we do look here for today, we are now well above this Bollinger Band, which is essentially a dynamic RSI, a relative strength index. And so therefore, we will expect this to close off and start to fall down from here, maybe towards the 20-day SMA, which I view this blue line as a trampoline. Typically, we see price bounce between overbought and the 20-day SMA when it's in a momentous position. And currently, we are well above into the red line. So I would imagine we will see this fall off. And if not fall off, we will see it trade sideways. Furthermore, obviously today with earnings coming out, we've seen it spike all the way up above $25, and now it is currently sitting at 24. So it has fallen off, but that is to be expected as swing traders are primarily the result of this. So that is what you would expect. But if we go back to a day chart here, you can see that it's probably going to start to plateau a bit. If we look at these EMAs, we are in a bullish crossover on the 150 EMAs, which is really important, and price targets aren't favorable currently for SoFi. So we have a maximum upside of a 12% from the start of the week and a minimum of a 72%. However, with that earnings coming out today, of course, probably to yesterday by the time this video is out, I expect that we will now see these analysts start to adjust their price targets. Typically, that is what we will look to see. We've seen it with AMD where the stock starts to climb. At the end of the day, these analysts do not like to be wrong. So they're going to start to say, right, let's raise these price targets so we don't look so stupid. And essentially what that causes is FOMO. People will start to see price targets double or triple or even increase by 50%. You know, it's going to cause a lot of FOMO within the stock and therefore lead to people buying in. So this stock could certainly rally from here. I think long-term prospects for SoFi look incredible. I love the way in which they formatted their actual earnings. It just looks incredible. It's nice to read. There might be a bit too much here. There is a lot to digest, but again, SoFi has done an incredible job. So that has been SoFi Technologies. This has probably been quite a long video. I feel like I've been talking forever now. Again, a great earnings. It looks to be set up in a great way for the future. Price targets should potentially start to rise from here. However, I cannot predict the future. None of this has, of course, been financial advice and should not be taken as such. So with that being said, I hope you have enjoyed this video and found it somewhat useful. If you had, please do let me know what you think of SoFi in the comments. Leave a like, leave a subscribe. It would be greatly appreciated. With that said, I will see you for the next video.